Prof, good to have you on the program.
Thanks so much, Nancy.
Welcome.
My pleasure.
Welcome. Now, let's get started. The MPC meeting, Monetary Policy Committee meeting of the Central Bank is on the way. I tried to give a definition of what the MPC means before the break, so we shouldn't go into all of that.
Yeah.
This MPC is coming about 6 months after Cardoso'S appointment and about 9 months after President Tinubu was sworn in. How much difference will this make? Because this is the first monetary policy meeting of President Tinubu's administration. Is it a little too late?
We had one in July, if you recall, under the...
Yeah, under Emefiele, isn't it?
acting governor.
Yes, under...
Yes.
Oh, God, how can I forget?
Shonubi.
Yes, Mr. Shonubi.
Yeah, so
yes.
recall that was even the time that the current MPR was adjusted from 18.5% to 18.75%.
Yes.
So, and I also recall it was also at that meeting that for the first time in a long while, the policy corridor was also adjusted from +1 -7 to now +1 -3. Okay, and of course, just as you rightly mentioned, there was no meeting in September and there was no meeting in November, and again, no meeting in January, but we are meeting in February, and they are meeting in February, and there is also an attempt to normalize the calendar by having another meeting in March. So I expect that this year, the MPC will have its statutory number of meetings, which, according to the Act, is actually 6. They're expected to meet at least 6 times. So what I see happening today, or what will play out, today and tomorrow, will be a situation in which the MPC will be trying to play catch-up. They have not met for 2 consecutive times, so they want to play catch-up to address the rising inflation. Since then, we've seen how inflation has climbed, the latest being 29.9%. And naturally, you would expect the central bank to be worried. So MPC, market consensus is that there will be, further rate hike, this meeting. So everybody's predicting that MPC will hike rates, and that's also where I stand. I think at the end of the meeting tomorrow, we should expect the MPC to increase the monetary policy rate from the current 8.75.
18.75.
18.75, yes. Yeah. So, but again, people have said this rate hike is likely to hover around between 200 and 500 basis points. But my advice is it has to be measured. All right. Even if the MPC is going to increase rates, it has to be done incrementally, okay? It has to be measured. There is no point, jacking it up by as much as, say, 200 or 300 or 400 basis points simply because you want to, rest on inflation all of a sudden. Okay. Inflation is not going to come down, all of a sudden. Okay, so the expectation is that, yes, rates are going to be hiked, but as I said, my advice would be to approach it in a measured way. Okay. Don't do more than, in my view, don't do more than 100 basis points.
Okay, that's actually what I wanted to ask, because if you say measured, what does your measurement mean?
My measurement is, don't do like 100 basis points max.
That should be
19.75. And you watch the situation. Of course, we know monetary policy comes with a lag. Okay, see how that filters in. By March, since you're also meeting in March, you know whether you should also increase. Okay, and by the time you meet again, your next scheduled meeting, you also consider whether to increase or to decrease. You see, what is playing out globally, all over the world now, it does appear that central banks are pausing monetary policy tightening. In the US, for example, you notice the Fed. The Federal Open Market Committee held rates.
No, but you can't use the U.S., Prof.
I'm just giving, I said many. I just mentioned the U.S.
I know.
I'm coming, India, South Africa, Ghana.
Yes.
Okay? They are all holding rates.
Yes.
All right? So I am not saying that we should, remember I just started by saying there is a need, it's already inevitable that we should increase. Okay? But I'm also trying to tell you the global trend. In the U.S., yes, inflation is easing. Inflation actually has come in at 2.6% in the U.S., so there is justification to hold the rate. at currently 5.25 to 5% band. In India, too, January 2024 inflation came in at 5.1%. Okay, India targets the Reserve Bank of India targets 4%, inflation rate. In South Africa, the South African Reserve Bank targets between 3.6% inflation rate, and inflation rate in South Africa in December was just around 5%. So I understand why these other countries are also why their central banks are holding rates.
Okay, Prof, you said a lot, and you've been speaking in the last 2 or 3 minutes.
Yeah.
So let me
if you
come
allow
in
me,
here.
I will speak to the program. Yes.
You're a teacher.
Yes.
So let me come in and specifically ask you a few follow-ups from what you said. Now, you've just given me an example of the U.S. And the Fed of the U.S. actually also speak to their citizens almost all the time, because even we'll be having the latest inflation readings from the U.S. this week. You always see it Fed Chair Jerome Powell speaking, and some other central bank governors across the globe. What I'm going to is that if you're telling me that rates of inflation is actually going down in those countries, we know that we do not have almost the same transmission mechanism. Because what we've been struggling with here is that even though the Central Bank of Nigeria's MPC moves in tandem with other global central banks, at least in the last 1.5 years,
Yes.
after helicopter money has caused problem across the world to increase rate, but the rate at which our own inflation responds to rate hikes have not been the same in US, have not been the same in Ghana, have not been the same in South Africa, perhaps because of also the structural issues that we have, a lot of misalignment, and the transmission mechanism has not been right, which Cardoso has also mentioned, that was why they thought it wise to give a space before they embarked on this. So how would you explain that? So does this your argument hold water now?
Yes, it holds water, Nancy. You see, you're very correct when you talk about transmission mechanism challenges in Nigeria, one of which is that a lot of currencies also circulating outside the banks. So it's only when you have this currency within the control of the central bank that the central bank can target, money supply, or target bringing down inflation via money supply. Remember, money supply is the intermediate target. All that monetary policy, does is to see how it controls the volume of money, the direction of credit in an economy. Okay, money supply. You notice that between December and January, we were told money supply increased from over 70 trillion to over 90 trillion. So there is still so much that is out there, again fueled by the huge ways and means that we saw, in the last 8 years. Now, the fact remains that inflation drivers in Nigeria today, unlike in some other economies, we have a double whammy situation. You have a situation in which money supply is contributing, and you also have a situation in which there are supply side factors. Now, it is the central bank duty to address the money supply related money supply inflation induced by money supply, which is why one of the instruments at the disposal of the central bank is this monetary policy rate. Now, I recall sometime last year, central bank came up with a report or a study that said that there was counterfactual evidence, or provided counterfactual evidence, to the effect that if it weren't for the increases that they did at the time, inflation rate would have been a lot higher
at about
than
30%.
Yeah, 30% as at that time.
Yes.
Okay, so there's no doubt about that. The tightening monetary policy also helps, but of course that doesn't say it all. A lot also still depends on what the fiscal side does, because of the supply side factors that are also driving, inflation.
Prof, do you know what's coming to my mind? Sorry to cut you short, because when that study was made, and the central bank announced it at that time, that if it was not successively raising rates, that inflation would have been as high as 30%. And this was in July of last year.
No, that was the one before July, the meeting
March
before
1.
July.
Was it the March one?
Yes, May.
Yes.
May.
Okay, May.
Yeah.
May. Yes, it was a May. Yes, I remember. And you know why I want to ask you this question? So do you now see that the lag we've had,
Yes.
perhaps from July that we had the last MPC,
Yes.
had actually now made that prophecy work. Because inflation now is at 29.9%. That's actually what came to my mind now with you saying this. I don't know if you understand what I'm saying, because there's been no follow-up in terms of perhaps rate hikes.
Okay,
to
but again,
inflation.
Nancy, say MPR is only one tool.
Yes, I know.
Yes, the direct tool. There are also, you have indirect tools of monetary policy. Okay. Now, the central bank MPC didn't meet in September and November. But since then,
it's been doing
yes, they have been using the other tools, particularly the indirect tools. Central bank, has also been tightening monetary policy using OMO. Look at what they have been doing, in recent times. Mopping up liquidity, using OMO. To the point that the last treasury bills, they did. Of course, that one is, borrowing for the government. They had to jack up rates by as high as 19%. So what I'm saying is, the tightening has also been done. It doesn't really have to be, via the MPR. And that's why I just mentioned that even if you're increasing MPR, it has to be measured because of its other, effects on output. MPR has a lot of effect on output. When you jack up,
on loans
yes, when you jack up MPR. Nancy, also come to think of, you said inflation rates rose to 29.9, partly because of the fact that they didn't meet. Also look at what happened to output, the GDP growth rate that we had. In Q4 of 2023, GDP grew by 3.46. Remember? Okay. Now, if it grew by 3.46, from a low in Q3 of 2023, don't you also think that it may not be unconnected with the fact that MPC didn't meet and there was no, rising? You understand?
Yeah.
So you have to balance these things, at all times, which is why I said, in taking any decision today and tomorrow, MPC must also have at the back of its mind, the output angle, because this economy is still struggling. Okay, we can't say because inflation rate is 29.9, we want to force it down to 21.4. It can't happen overnight. That's the central bank's target inflation rate for this year, 21.4%. It's not going to happen overnight. So there has to be, it has to be phased. It has to be a plan to get to that point because of its adverse consequences on output.
Okay.
Do you know that in the U.S., we are just mentioning U.S., it is not for nothing that the U.S. Fed has as its primary mandate. What's the primary mandate of the U.S. Fed?
Price stability?
It's not just price stability. The U.S. Fed has a dual objective, price stability and maximum employment. That's the U.S. Fed. If you go to India, they tell you it is price stability with an eye on output, on growth.
But our own
it is
price
clear.
Stability. Nigeria's
our own is just
monetary
and price stability. That is why I think in the CBN Act, the amendment that is going on, if it is CBN should also be part of, also be concerned, with growth, because of our unique nature. Okay.
But
even in South Africa,
the CBN was concerned with growth in the last administration. That's why we're in this quagmire.
No, CBN was only performing.
No, because we've done even both, Prof. In the days of Emefiele, CBN was concerned about growth. That was why you saw a lot of interventions, quasi-fiscal policy.
Yes.
This Sanusi was a bit stringent in terms of price stability because we saw inflation that came down during Sanusi's time, and more of the financial stability. But for Professor Soludo, I think his was also more of financial stability at that point, because during Soludo's time, we did not have all this economic quagmire. We had FX reserves and all of that. So he actually went to position the financial sector, which there's the banks.
But even up to now, we can speak to some level of financial stability. We are not talking about economic. I'm talking about in terms of financial soundness indicators of the financial system. Our financial system is still solid.
Yeah, it's
Whether
still
in terms of non-performing loans, in terms of liquidity ratio, in terms of
what I'm trying to say in essence is that what you just said, central banks over the years have focused on either way.
Yes.
On growth, they focused on growth the last time.
Yes.
See where we are now.
Yes, and you see, what you are talking about, what Emefiele did, in the area of its development finance function. Section 31
Which is growth now.
Section 31 of the CBN Act, talked about it, peripherally. But I am talking about using monetary policy instruments, using the MPR, for example. When you are trying to implement monetary policy, okay, you should also have at the back of your mind the growth impact.
Okay.
Okay, because when you jack up MPR, it has effect on as credits. Okay, using the credit channel, access to credit is affected. Even the cost of funds, okay, become affected. And at the end of the day, it may even translate to higher cost of, higher cost of goods and services. Okay. So that what you are trying to solve at the end becomes, end up having it becomes counterproductive.
Okay, what's your prediction? You've given me a 19.75% increase in rates.
That's what I would desire. They should not do more than 100%. 100 basis points.
That's 1% increase.
Yes.
How about for liquidity ratio?
No, they should retain liquidity ratio, maintain the asymmetric corridor, 100 basis points minus 100 basis points.
It's currently at 30%.
Eh?
Liquidity ratio is currently at 30%.
Yes.
So how about your prediction for CRR?
CRR should be, CRR, you see, my problem with CRR, if it is possible to reduce CRR at 2.5% is high, Nancy. It is one of the highest in sub-Saharan Africa, okay? So let me tell you something. If you see countries where MPR is high, take Ghana, for example. Ghana's MPR, okay, benchmark policy rate is 30%. And they had to raise it as high as 30% because they needed to force down inflation rate. Ghana's inflation rate, December, 23%. Okay?
It was at the time
was
last year,
October,
over
it was
50.
over 50. In fact, October
yeah.
had something. So
52%.
now, but the reserve requirement in Ghana is just 15%. You see, cash reserve ratio has a way of, remember, when it has a way of, reducing, constraining the ability of banks to lend, because all of the cash you're sterilizing more or less because they are not remunerated. Okay, so it's quite high. All right, so if the central bank, the MPC is going to increase the MPR, okay, because you're targeting short-term rates. All right, remember that's the rate at which they lend to the commercial banks. Okay, I also think the cash reserve requirement is high at that 2.5%. But of course, the central, I don't expect them to reduce it at this time because they are all in a hawkish mood. They want to reduce, they want to mop up money from the system. Okay, but I'm also happy that the DG of SEC is in that committee now. Okay, so I expect him to be like the dove in the committee. So while others are going to
strangle her neck.
Yes.
He's saying, calm down,
because of also the impact on the capital market.
The grip shouldn't be too much.
Exactly. That's why I'm happy that he got.
I think he's a new one. I think this is the first time
It's the first time we're having the DG of SEC.
Of SEC being
on the committee.
So it's not just about. Yeah. Now that brings me to the next question, because for other MPCs, I don't know the style that Cardoso will come up with tomorrow.
Yeah.
I'm looking forward to see what he will do tomorrow. But the styles we've always seen is that the MPC will review global economic environment, then they will cascade to local.
Domestic.
Yes, then they will come to inflation. They will talk about stock market there.
Yes.
I'm talking of their communique now. Then they will come to the considerations, how they arrived at that. Then they will come then they will come to the decisions. Yes. What do you expect to hear from Cardoso if he takes this model? Global economic conditions, what are the issues that they may consider? Are there other risks that you're seeing? Because the issues are really glaring, but I don't know if you are seeing others that I'm not seeing. I know there's still Russia, Ukraine, there's still Gaza. Oil price is still a bit stable.
Yes.
Global inflation is still high, but easing. Some countries have entered a recession. I'm not part of their team, but I'm just saying I've reeled out like 5 that I expect to be there.
Yes.
What other things are you looking at, apart from the things I've mentioned, so that we can go quickly to the local?
Basically, that's it. And of course, the mentioning the inflation trend in other countries, the fact that it's also moderating in the U.S. One implication of lower interest rates in the U.S. is that it has a way of also incentivizing capital flows to developing economies. So the CBN here may want to take advantage of that and raise the rates to also bring in inflows. So those would be some of the considerations. Of course, including that of domestic. So I expect the format, to remain essentially the same, except that you're not likely to see, previous communique would devote, some paragraphs on we have, intervene in so areas. So all of that, yes, won't be there any longer. So in a nutshell, I think I want to see an MPC that, would always look at the balance of risks, okay? Even when there is a tendency to tighten, they should also have consideration for...
How can Cardoso and his team now, the MPC, really achieve that balancing act? The balancing act of tackling inflation head-on and fiscal policy spending, because Uwaleke needs to stimulate the economy. Now, cost of living crisis up, Nigerians are groaning, Nigerians are struggling, purchasing power has gone down, more people have been pushed into poverty. So for even people listening to us now, how can Cardoso and Uwaleke really maintain that balance to make our economic lives better?
I think the major challenge we're having now is coming from the exchange rate channel because of this persistent fall in the value of the naira. And I think the central bank is beginning to also, address those challenges, especially with this recent revised guidelines for, BDCs. Yes, in the past I had always said central bank was only focusing on supply. What about demand? Something, needs to be done about demand. And I'm happy that they're beginning to also look at the demand, the demand side. And of course, that has to be done in conjunction with the fiscal side. The fiscal side should also come up with measures to curtail demand, because if we don't curtail demand and we only focus on supply, they say, creates its own demand. You bring in this dollar, it will also be frittered away, except something is done to curtail demand. So I'm happy that the central bank is introducing these measures now to curtail demand.
Which one of the measures? Because they've introduced a lot of measures in the last 3 weeks or so. There are also reports that we saw this one, the weekly intervention.
Been doing all along, Nancy, whether it is the enforcement of net opposing position or removing exchange rate for international monetary, all those ones are supply side.
Okay.
Yes. On the demand side, you now want to say, you want to restrict speculative demand, for example. You say if you're selling to a BDC for more than $10,000, the BDC must declare the source, okay? If you are getting a BTA or a PTA, we only give you 25% of that cash. If you want to be paid $500, okay, anything above that should be paid through your banker. So all these are meant to curtail, frivolous, demand for the dollar. And I think there are measures in the right direction.
How about the reports that we also saw around weekly interventions now to the BDCs? How about we come back, because the central bank discontinued that process in 2021.
Yes.
But now it's coming back to it. So aren't we coming back to a managed float kind of system?
Yes.
We are saying something, and our action is saying something else in terms of, okay, let's free float the naira. Let the naira find its level.
You know that
the CBN wants to be giving weekly interventions to, but in a bit of restrictive manner, as it were.
That's the point.
And they're also defending, as it were, bringing out dollars to defend
the reality.
Naira. What everybody has been against. I wonder how the people.
The reality is that
country.
you can't float the naira. The fundamentals are not there. So it's becoming obvious now by the day that it's not possible to float the naira.
So that means the economics that work in other countries will not work here.
How can it work here when you have, when you say under conditions being equal? Other conditions are not equal in Nigeria. Okay, so the idea of even giving them, coming back to say we'll give them $20, beginning today, $20,000 beginning today, I think it is okay, to, at least to calm the market, particularly when they are saying that it is only going to be given to qualified BDCs. In other words, they have set criteria that they must meet before they qualify. In the past it was just to all of them, over 5,500 BDCs, and I am happy that the central bank is now working towards, sanitizing that space and ensuring that, the number is reduced so that, to a manageable position, a manageable number that they can effectively supervise. So I think the measures that are being put in place now, in my view, are right measures.
Is the measures okay? 2 billion naira for tier 1 BDC license? Is it okay or is too much?
Well, as I said, it's all in a bid to ensure that the number, if we can succeed in reducing the number to under 500, I think to me that makes a lot of sense.
I spoke to the president of BDCs at the time, I think some weeks ago, and I asked him questions like this, as if we foresaw what was going to happen. And he said, Nancy, that they were not opposed to mergers and acquisition. So let's see what happens, what the BDCs will come after that. Prof, just before we go, because we have a few minutes to leave here, I would like you to take on your teaching hat and let's be able to break down some of these terms that we've used. Like we talked about OMO. So for people watching, or for students that are watching us now, where we see the CCBN coming in with another tool, OMO, in terms of auctions, I would like you to explain that. I'd like you to explain what you also mean by asymmetric corridor, because we see that it will come out tomorrow when Cardoso explains this, so that people will understand, okay, your MPR is also this, so your asymmetric corridor is +1 or minus. So what does it mean? Any other thing I want to around? It's just to speak about that.
Okay, I hope you have your pen and
Yeah,
paper.
Prof, just go ahead.
Asymmetric corridor.
Yes.
Asymmetric corridor currently is +1 -3. Now, first of all, you have the MPR. MPR is the monetary policy rate.
Yeah.
It is the rate at which the central bank lends to the commercial banks. Okay.
That's the anchor rate, the main
yes,
rate.
the main rate is 18.75. So when the central bank puts a corridor around it, it simply says if the corridor is +1, as we have it today, it means that the effective rate, the rate they actually lend is that's MPR +1. So when the central bank is lending, they lend at 18.75 +1%. So the lending is not at 19.75.
Yes.
Okay. Now the -3 there is simply saying if you have excess cash you want to also deposit with the central bank, that's the commercial banks now, we also remunerate you, we give you interest. So when commercial banks bring their money to the central bank, if you call it to invest more or less, central bank will now give them 18.75 -3, which is 15.75. So they now pay them interest and incentive for doing that. And why would central bank want to narrow that corridor? Before it was +1 -7.
Yeah.
Now it is +1 -3. When you narrow the corridor, when you increase the incentive you give them, you encourage them to bring money to you. So it's a way of also helping to mop up money from the system. So it's part of tightening, more or less.
Okay.
Okay. So asymmetric corridor is simply, that corridor that establishes a standing lending facility. Standing lending is at 19.75, and then a standing deposit facility, standing deposit rate. SDR. Standing deposit rate is at 15.75. When they deposit, they now give them 15.75. OMO is just open market operations. When central bank wants to mop up money from the system, it issues OMO so that commercial banks can so there is OMO bill, and there is also the treasury bills still under open market operations.
Okay, what this is telling me is that I think I need to do a show on all of these terms so that people will understand. But Prof, as we go, let's also make sure to tell our audience that as we see a hike in rates, it also means that the savings rate in your bank also increases. Because the savings rate, at least historically, the last one though, 30% of MPR becomes your savings rate. Because at this 18.75, we've seen savings rates in the bank at, I think I did a calculation at the time, 5.63 or so.
Yes.
Percent. So if Cardoso and his team increases rates tomorrow, that means for us as Nigerians, we should expect higher savings.
That's what we should expect. Then it's also, central bank should also ensure that banks actually also increase savings rate. Because what usually happens is that when rates are increased, banks only reprice their loans, increase rates, and but they don't touch the savings rate. So central bank should also ensure that the two
the two really match.
Exactly.
And who should even keep your money in the bank? Because even if you do it, it's still less than inflation rates. So your money is losing value.
So bring it to the stock market.
The stock market advocate. Well, thank you very much for coming today, Prof. I hope you enjoyed your time with me today. This is the first time this year.
This year,
Yes, this year.
Thank you.
All right. Thank you very much, Prof.
I've
been speaking with Professor Uche Uwaleke, who is a professor of finance and capital markets at the Nasarawa State University, a former commissioner of finance in Imo State. We've been looking at the MPC meeting underway. I hope you've learned a lot from today's show. Please join me again tomorrow. Another guest, I'll be here. God willing, be the best you can be and be the change that you want to see. I am Nancy Naji. Bye.